Welcome back to Investing Talk Podcast. Today we are tackling one of the most volatile and, let's face it, talked about stocks in the whole EV supply chain, Quantumscape. Our mission today is really to investigate that burning question quite a few of you have asked. Is Quantumscape actually a good time to buy now? We've gathered the latest financial reports, detailed technical analyses, and of course those ever-present market rumors. We want to give you a clear, unbiased picture of this cutting-edge battery tech company. And hey, if you find this analysis helpful, please do subscribe, like the video, and comment below. Let us know what you think. Also, really important, if there's a specific company you want us to look into next, please leave a comment. We do read them.
Okay, so Quantumscape. We have to frame this right from the start. This is pure high speculation, high growth technology territory. It's less about valuing a current business.
Right.
And much more about separating the fundamental reality, the cold, hard numbers from the massive hype surrounding solid-state batteries, or SSBs.
Okay, let's dive into that fundamental reality then. Unpack the core financials first. If they're selling this world-changing future, what's the present actually look like on the books?
Well, the present business is essentially an R&D lab. It's funded heavily by investors. They are fundamentally a pre-revenue company.
Still pre-revenue. Wow.
Yeah. We're seeing minimal commercial revenue reported. And while, analysts project maybe some revenue starts trickling in by 2026, the consensus is tiny, like around $5.99 million.
That's almost nothing for a company with this kind of valuation.
Exactly. It's basically a rounding error.
And crucially, they must be burning through cash pretty aggressively to maintain that R&D lead.
Absolutely. Profitability is deeply negative. We saw a significant net loss for 2024, around $426 million.
Ouch.
Yeah, resulting in a loss per share of about 94 cents. And analysts, they project these negative earnings per share will continue right through 2026. That's just the financial cost of trying to, invent a completely new generational technology from the ground up.
Okay, so if they're burning over $400 million a year, how are they even surviving? How are they sustaining themselves without constantly going back to the market and diluting shareholders? That's a huge risk factor.
It is. And this right here is probably the single most important financial point supporting the bull case right now. Quantumscape reported having approximately $950 million in cash and equivalents as of June 30th, 2025.
Almost $1 billion.
Almost $1 billion. So if you put that together, a $426 million annual burn rate against a $950 million war chest, well, that means they have roughly maybe 2.2 years of operational runway.
Okay.
2 years before they absolutely need commercialization to start scaling successfully, or else they face, massive equity dilution.
So they've essentially bought themselves a critical 2-year window. That cash cushion is what gives them resilience against all the market swings and lets them focus just on getting the tech right.
Precisely. And they also carry very little debt, which gives them maximum flexibility. But make no mistake, that timeline is still aggressive. And it brings us right to the really critical question. What is this revolutionary technology they're buying 2 years to perfect and, more importantly, manufacture?
Yeah, this is where it gets really interesting for anyone even thinking about this stock. What is Quantumscape's unique technological edge? What's the competitive moat that justifies this enormous risk and, frankly, the multi-billion-dollar valuation?
It really comes down to their ceramic separator technology. That's what seems to position them as the leader, or at least a leader in the solid-state battery, the SSB race. But the real potential game changer is the anode-free solid-state battery structure they're developing.
Anode-free. Okay, break that down. What does anode-free actually mean for, say, an EV driver or the car manufacturer?
Okay, think of it like this. Traditional lithium-ion batteries, the ones in your phone and current EVs, they need fairly heavy, complex, often expensive materials like graphite and copper to make the anode work. Quantumscape's tech aims to eliminate that anode entirely.
Completely.
That's the goal. This means potentially drastically lighter batteries, significantly longer range per charge, maybe faster charging, and just fewer components that can potentially fail or degrade. Look, if they succeed in mass producing this, it's a genuine paradigm shift in battery chemistry. It's sort of like the leap from an old spinning hard drive to a lightweight solid-state drive in your computer.
Okay, that analogy makes the potential instantly clear. And we have seen some tangible proof recently that this tech is moving out of the lab, which definitely helped drive that recent stock spike.
Mhm.
What were those key validation milestones?
Well, the big one technically was the joint demonstration of their SSB tech in partnership with Volkswagen's PowerCo that confirmed efficiency and safety benchmarks.
With VW, okay.
But the real public theater, the thing that got headlines, was back in September 2025 at the IA Mobility Show. They did the world's first live demonstration of the anode-free battery actually powering a vehicle, a Ducati
I
motorcycle.
remember seeing clips of that.
Yeah. And that really shifted the narrative, didn't it? It went from, if this thing works, to, okay, when can they scale it?
And these strategic partnerships, like the VW one you mentioned, they're absolutely critical, not just for validation, but for managing that scaling risk, right?
Oh, totally essential. The expanded partnership with VW's PowerCo is central. It involves milestone-based payments, potentially up to $131 million. That's validation in terms of both the tech and the capital commitment from a major player.
And there was another recent one, too.
Yes, they also recently firmed up a strategic partnership with Corning. That one's focused specifically on developing and commercializing those crucial ceramic separators, a key piece of their proprietary tech. Getting manufacturing right for that separator is vital.
And speaking of manufacturing and scaling,
Mm-hmm.
there's a pretty significant rumor buzzing around the market right now, isn't there? Something
Yeah.
that could be the ultimate manufacturing validator if it pans out.
Yes. There is definitely unconfirmed speculation, and I stress unconfirmed, about an imminent formal joint venture or maybe a partnership with Panasonic.
Panasonic. Wow. Okay.
If, and it's still an if, but if that materializes, it would be an absolute game changer. Why? Because Panasonic is a titan of high-volume battery manufacturing.
They know how to build batteries at scale.
Exactly. Look, a rumor is usually just noise, right? But a partnership like that would validate their technology in a way no lab test ever could. It would signal that scalable, high-volume, potentially cost-effective production is actually feasible. That's the execution monster they absolutely have to slay.
Okay, let's pivot a bit. Let's switch gears to the trading perspective. Because of these milestones and the buzz, the stock is seeing just massive momentum lately. What are the charts telling us right now?
Yeah, the price action has been, well, explosive is the word. The stock rallied 27% in just the week ending October 1st, 2025.
Yeah.
It closed that week at $14.59, and that came after a massive 55.4% surge through the whole month of September.
Incredible run.
It really is. The price structure looks strongly bullish. It's trading comfortably above both its medium term, the 50-day moving average, and its long term, the 200-day moving average. That usually confirms the underlying momentum is pretty robust and suggests, institutional money is likely flowing in.
So for investors who are watching the chart closely, what are the key levels they should be tracking, to confirm if this move has legs?
Okay, immediate support seems pretty critical. It needs to hold between roughly $13 and $13.50. That was a prior breakout zone, so you want to see it hold.
13 to 13.50 support. Got it.
On the upside, near-term resistance is likely going to be tested pretty soon in the $16 to $17 range. So technically, the outlook suggests maybe a bullish trading range between $13 and $18 over the next, say, 3 months.
Okay, but here's where it gets really fascinating, almost paradoxical.
Yeah.
We have this stock trading above $14, huge momentum. Yet, if you look at traditional Wall Street analysts, the consensus rating is still almost universally a sell. The average price target is way down at like $5.88. Is this just the definition of a speculative bubble, or is Wall Street completely missing the boat here? What's going on with that disconnect?
It's a great question, and that gap really highlights the difference between, say, traditional value investing and what's essentially venture investing playing out in the public markets. The analysts, they're using conventional valuation models, right? Looking at EBITDA, future revenue projections, and for a pre-revenue company burning cash, those models look terrible, hence the sell rating.
Makes sense from their perspective.
But the immediate market sentiment, the thing actually driving the price right now, is overwhelmingly bullish. It seems to be fueled by those institutional inflows we mentioned, probably coming in after the PowerCo and Corning news, and also just highly positive retail chatter online. The market right now seems to be valuing Quantumscape not on its current P&L, but on the potential net present value of maybe, possibly, controlling a huge chunk of a future multi-trillion-dollar battery market.
So Wall Street's lagging the tech validation news.
It seems like it. Wall Street seems to be lagging behind the market's real-time reaction to these verifiable technological milestones.
Okay, so looking ahead just a bit, what are the key short-term triggers? What should listeners be watching for in the next few months that could really drive the next leg up or potentially down?
Well, the most immediate scheduled event is a Q3 2025 earnings report. That's expected sometime in November 2025. Investors won't just be looking at the loss number, though. They'll be scrutinizing any updates on the pilot production ramp-up, and maybe the financial impact of those recent milestone payments from VW showing up.
Progress reports, essentially.
Exactly. Progress in cash flow. Beyond earnings, other critical catalysts would be further public milestones coming out of that PowerCo partnership. Any kind of formal announcement regarding the Corning manufacturing ramp-up would be big. And of course, the elephant in the room, confirmation, or even just stronger hints of that major rumored Panasonic joint venture. That would likely cause a huge reaction.
And maybe new partners beyond VW?
Yeah, industry watchers are definitely anticipating potential additional OEM partnerships beyond Volkswagen. Any news there would be significant.
Okay, we absolutely have to balance all this enthusiasm and potential with the, frankly, unavoidable risks. It's still a pre-commercialization company.
Yeah.
We touched on financial risk, but let's dig into that core execution challenge again.
Right. The primary company-specific risk is just execution. It is monumental. It's one thing to prove the chemistry works beautifully in a lab environment. It's an entirely different, much harder thing to successfully and, crucially, cost-effectively scale manufacturing. Going from small, maybe delicate prototypes to durable, high-volume gigafactory output. That operational hurdle is where so many brilliant technology startups stumble. The cost structure can just collapse on them.
The infamous valley of death for hardware startups.
Precisely. And tied directly to that is the financial risk of dilution we talked about. If commercialization gets delayed beyond that rough 2-year cash runway we calculated, they will inevitably have to raise more capital. That hits existing shareholder value hard.
And competition isn't standing still either.
Not at all. Finally, there's market risk. Competition from improving traditional lithium-ion batteries from other solid-state players, or even completely new emerging battery technologies, could eventually erode Quantumscape's long-term margins, even if their tech works, assuming they don't maintain a significant durable lead. So if we summarize the investment thesis laid out in the sources we looked at, the overall outlook provided is actually highly bullish. They rated it an 8 out of 10.
An 8, despite the risks.
Yeah, an 8. And this aggressive rating isn't because the company is profitable now. It's clearly not. It's given specifically because of what they see as its potentially unrivaled IP strength, those substantial cash reserves providing flexibility, and that string of imminent technological validation catalysts we just detailed.
Okay, so wrapping this up, what does this all mean for you, the listener, trying to decide? It seems this company, right now, could be attractive for potentially 2 different types of people. Maybe short-term traders who are playing these event-driven spikes, like around earnings or partnership news in the next quarter or 2. And then also for very long-term investors, the ones making a highly calculated high-risk bet on potentially owning a piece of generational battery technology dominance years down the line.
That sums it up well. High risk, potentially very high reward on multiple timeframes.
So maybe here's a final thought, a provocative question for you to chew on. Given those significant cash reserves, nearly $1 billion, and the very low debt Quantumscape holds, how long can this company really afford to maintain Wall Street's sell consensus rating if, and it's still an if, but if, it confirms a major partnership like Panasonic or demonstrates a real mass production breakthrough sometime in the next 12 months?
That conflict, that tension between the current analyst view and the potential market reality, if they execute, that's really the key question for you to consider as you watch this fascinating story unfold.
Indeed it is. Lots to think about there. Thanks for tuning in to Investing Talk Podcast.